Welcome, you're watching Trending Tech on NewsX World, where we bring you the latest tech breakthroughs, trends and gadgets from around the globe. Stablecoins are rapidly changing the way we send money across borders. Businesses, financial institutions and individuals are now using these digital currencies pegged to staple assets like the US dollar. The payments make it faster, cheaper and more reliable than traditional wire transfers. From international business transactions to remittances and emerging market payments, stablecoins are streamlining global finance. Powered by blockchain technology, they can settle transactions in minutes, reducing costs and eliminating delays common in banking systems. Adoption is growing rapidly and companies are embracing this new digital payment infrastructure. However, stablecoins also present risks, including regulatory uncertainty, counterparty issues, risks, and the need for robust security and compliance measures. To talk about this, joining us now is Katie Romero-Finger, the CEO and co-founder of Babs. She leads a Web3 data-driven growth and advisory firm and has 20 years of experience in global tech, marketing and PR. Her client portfolio includes ventures that have raised over 200 million in funding and achieved mainstream adoption. Katie helps founders and creators across the blockchain, crypto, DeFi, fintech, game fee and Web3 to build sustainable brands, utility-driven products, real communities and multiple revenue models. Thank you very much for joining us here on NewsX World. It's a pleasure to have you.
Thank you very much for having me. Good morning.
Good morning. Let's get straight into it. What exactly are stablecoins and how do they differ from other cryptocurrencies?
Yeah, so stablecoins are digital tokens that live basically on the blockchain, but instead of having like a floating price, similar to other cryptocurrencies like Bitcoin or Ethereum, they're pegged to a real world asset, often the US dollar. If we think of it this way, Bitcoin equals digital gold. The price can go up and down. Stablecoins are the digital dollar, so you can use them to pay, move money, or park cash. Basically, the main things that are different are price behavior, the backing, and then obviously the use case. So the price behavior, a cryptocurrency is going to be a more volatile currency, while stablecoins will always stay around $1, hence them being pegged to the US dollar. So cryptos can be more speculative and stablecoins are less speculative in that sense. Many stablecoins are backed by real world assets. Like I said, we're working with a client right now who is building a stablecoin that is pegged to gold, a gold mine. And Bitcoin is more like a long-term asset, where stablecoins is something that we can use day to day. It's what we could look at as almost a parallel economy to the US dollar or the euro or even the pound.
Thank you very much for explaining that with such clarity. Let's move on now. And how do stablecoins maintain their stable value, let's put it?
So again, being backed to an asset that is relatively stable, such as something like gold, the US dollar, means that you're essentially working with something that is already a stable asset. Some people might argue that that's not true, just because the world economy right now is a bit up and down. But for the most part, that's the use case scenario. In plain English, basically, asset-backed stablecoin stays stable because there's a pile of something physical somewhere that we can rely on. So for every one stablecoin, we have $1 somewhere in a treasury, or gold, for example, in a mine, while crypto and are algorithmic. So it's the way they work. So basically, software rules constantly adjust supply and collateral to defend the $1 target, more or less.
And Katie, why is this method becoming more and more popular for cross-border transactions as opposed to traditional means as like wire, let's say?
Yeah, I think there's four big reasons. One is speed. two is cost, three is predictability, and then obviously accessibility. A really good use case is we look at countries that are developing nations or economies that don't have the stability that places like the UK or the US or other European countries have. And so for them to move money, you have a family member living in the US, for example, that's working and wants to move money back to their family in Latin America. That can often take 2 to 5 days to cross borders. And just so you know, that money doesn't really take that long, but mostly the bank is using your money to make money and holding it as it moves. And then the cost is quite high. So if you're someone working really hard to send money back to your family, you often are paying between 2 and 5% on that movement versus a stable coin, for example, is instant. I say to you right now, you tell me I need $5 and I can move it to you within the next seconds, you have it in your wallet. Also predictability, we can track it with the blockchain. We can know exactly where it is. When you do a wire transfer, there's actually a period of time where they're actually in banks and other financial institutions, people that their job is simply to track where a transfer is at a given moment, because it's very complex in the sense that there's a moment in time where we don't quite know where money is sitting versus stable coins that are living on the blockchain. We can see in every moment really where they are.
Yeah, and which industries are adopting these stable coins the fastest, particularly for these cross-border transactions, would you say?
So obviously we have the entire crypto industry. For example, as a business owner, I have a team, and most of my team, it's easier for me to pay in stable coins, and it's easier essentially if I have people in different regions that they can accept the stable coin and that value really stays, right? So instead of paying in US dollar and they have to transfer it to a euro, that stable coin is they're able to use in a global economy. Fintech and payment processors for sure. I think my first go at blockchain was 2019, and I was working with Citibank out of Hong Kong. And basically they were looking at adopting some sort of way to just process more transactions, something very basic that banks need to do, right? They process millions a day. So new school payment companies even use stable coins as the underlying rail. Even if the user only sees their local currency, the stable coin is what's happening in the background. And then again, freelancer and creator platforms, that's what we work a lot in that space. And then B2B trade and vendor payments. So small and medium-sized businesses are starting to experiment with this type of payment, especially in developing economies, because it's keeping the stable coin keeps the economy stable as opposed to paying in the Venezuelan peso that devalues very easily.
Yeah, it makes perfect sense. And of course, with new technology, risks emerge. What are the risks of using stable coins for businesses and also individuals as well?
Yeah, I mean, there's a couple, depending on what sector you're in, you can see different risks, but I think most people would say regulatory is probably the number one right now. We're in an environment where regulations are different in each jurisdiction, in each global place. So today or tomorrow, something could come through that changes what is actually happening, and that could impact the stable coin. You'll also have issuance risk. So I think it was about 2 or 3 years ago, Circle is one of the biggest issuers of stable coins, and there was what we referred to as the DPEG. Now that was fixed pretty quickly, but there was a bit of chaos at the moment because the minute that there's something, the physical asset isn't attached to that stable coin, you see a really rapid devaluation. And then obviously technical, blockchain is a very strong product and a very strong technology, but it's technology and there's always failures there. So, and then again, there's counterparty and censorship risks. So centralized issuers can sometimes freeze addresses and block transactions. That's why we work in a sector where we refer to as DeFi, which is decentralized finance, which we refer that way. We see there's more security in that effect.
Yes, and Katie, finally, what innovations are coming next in blockchain payments that could disrupt traditional finance, like stable coins have, for example?
Yeah, I mean, there's a lot happening. This is an industry, crypto or the Web3 industry moves probably twice the speed or more than that of any other industries in technology or in tech. So we're seeing tokenized bank deposits and real world money on chain, which is going to be really, really interesting. More efficient, low fee stablecoin networks, which is going to be great. I mean, the minute that you say you can move money and you're not paying all these fees is huge. And then programmatical payments and smart money is also a very big thing. So because these assets are programmatable, my God, I can't say the word this morning. You can build logic into the payment itself. So pay a supplier automatically when the goods arrive, right? It's almost like you have an AI agent doing a lot of your bookkeeping, which will be very, very interesting, I think, for big companies that are moving a lot, that have a big supply chain.
Katie Romero-Finger, it's been a pleasure. Thank you very much. We've all learned so much, and thank you for speaking to us here on Trending Tech. And with that, it's a wrap on this episode of Trending Tech. For more updates and innovation, stay tuned on NewsX World.